Is it a strong dollar reality for Secretary Mnuchin and President Trump? Do they need to get used to this?
Well, we certainly have a pretty broad-based dollar strength here. It's versus the euro, it's versus emerging market currencies, really across everything.
Right.
And it's surprising a lot of people because in January, we had this very unusual situation where U.S. interest rates were rising dramatically and the dollar was nevertheless going down. So we have sort of a recoupling, if you will, with interest rates. And I think the key thing here is that as opposed to January, we actually have some concerns about global growth. In January, all global interest rates were rising with the U.S. interest rates. Now they have a very, very big divergence.
Right.
And I think there's this doubt about what's going on globally that's really making the dollar rally quite
Tell
powerful.
me about, and this is where, with your book on the Euro crisis, you were so good, the inertial force of these trends. I mean, rho equals MV, great. We can all do physics. Baloney. It's behavioral. It's cultural. It's capital flows. It's real interest rate diversions. Do you believe in an inertial force that once a dollar's strength gets going, it feeds on itself and keeps going?
I think at this point of the cycle, it's pretty dangerous to have like a 12-month view. There's a lot of people who are forced to write down a 12-month view.
Yeah, it's called the sell side. Not that Nordvig ever lived this. Good morning, Nomura. Good morning, Goldman Sachs. Are you going after Francisco Garzarelli today? I mean, what are you doing here?
I'm just saying writing down a 12-month view can be a pretty dangerous way of doing analysis. Yeah. I think at big turning points in the cycle, right. We had one in 2014 for the dollar. You could write down like a multi-year view.
Yeah.
But at this point in the cycle, I think you have to be more tactical, and I think we have a tactical bounce here, 2 to 3 months.
Nejra, tactical's like we got to get to Friday. Jump in here, Nejra, please.
Jens, this chart, take a look at it, is showing the revived correlation between rates and the dollar that so many people are talking about. It's a story about central bank divergence. However, that divergence was still in place last year. So why is this happening now?
Yeah, I think really January was the anomaly, right? We had an incredible breakdown in the correlation in January, and that had a lot of special factors associated with it. So I think if you think about it, from a sort of strategy perspective, do you really want to flip-flop your framework all the time? You have to be very careful in terms of being flexible, but not totally changing your framework. And I think a lot of people got very wrong-footed by that breakdown in correlation in January, and now we're really back to what is more normal. So we shouldn't be overly surprised. It's just a matter of sort of discounting the special forces in January, really.
Back to normal. Got it. So then, is there any more reasons for dollar strength in the year ahead other than this rate differential?
Well, so I would say the very first thing to monitor is actually what's going on trade, right? So we have the Chinese negotiation going on. I think that's going to be a multi-month process. We're not going to get anything very concrete there. But we do have the Nafta process where we could get a form of resolution within weeks. And that's obviously going to impact the currencies in North America. But it could also give a little bit of a boost to the dollar on a global basis because it's going to take away some of that concern about protectionism that was dragging down the dollar earlier in the year.